Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's going on in investment markets and what to look out for in the days and weeks ahead. Now, we had 2 weeks between this show and the last one, which gave the market plenty of time to digest what was going on beneath it. And in fact, we've now finally got a new all-time high on the S&P 500, and that has really been driven by tech stocks once again. So if you go back to the last episode, you will recall that I mentioned that a lot of the momentum trades we've had in the last few months were under threat and were starting to look like they might reverse. So that meant tech stocks starting to sell off, bonds starting to sell off, and gold also starting to sell off. What we actually had in the last 2 weeks were all those momentum trades start to pick up again. So we had the Nasdaq hit new all-time highs. We had Apple actually hit 2 trillion in market cap, making it the most valuable company in the world and actually worth more than the entire Ftse 100. So if you want a demonstration about how much the UK stock market is being left behind, and perhaps there is no better demonstration than the market cap of Apple. We also had Tesla share price rally over 40% in a matter of just days. In fact, 8 days it took to rally more than 40%. So if you've had some exposure to that within your portfolio, then you've done very well indeed. So the rally in tech shares pushed the S&P 500 to a new all-time high. So that's erased all of those losses since the coronavirus. Now, if you look at the rest of the world, they're still lagging. The Ftse 100, for example, is still down around 20% year to date. If you look at Europe, it's still down around about 5 to 10%, depending on which market you look at. So elsewhere, the picture isn't as rosy as it is in the US. But what we've had is the uptrends that have been in existence since the March low. So it's been about 100 plus days long, this uptrend, particularly in tech stocks, has maintained. So if you look at the Nasdaq, there is an upward trend. It's bounced along up that upward trend channel. That has been maintained despite the recent pullback. So at the moment, tech stocks continue to push to all-time highs. Now, if you flip over to gold, for example, which was under threat, now that has actually pulled back. There was a correlation between tech stocks and gold. They've been moving almost in tandem for much of the year, but we've seen a bit of divergence of late. And in fact, the gold price rallied up through 2000 again, but then has pulled back and has diverged away from the Nasdaq 100 and is now testing the sort of 1910 level. Now, that is the uptrend line that we've been talking about in recent shows. So if the gold price is going to bounce, it needs to bounce pretty soon. So keep an eye on that level. If it breaks down below that, then we're going to be looking at the sort of $1,800 per ounce levels, that sort of range for the next support lines. Now, if we jump across to bonds, then the yields on bonds have been rallying in the last sort of few days. And we've actually had the 10-year US Treasury yield push above 0.7%. And then now there's a key level around about 0.72, which if the yield breaks above that, then that could be a sign that the yield is going to push higher, which is bad news for treasuries and generally bad news for developed world government bonds and bond markets on the whole. So keep an eye on that. So we've had the market flip-flop. It reversed. The momentum trades rallied again. Now there are signs that things could reverse once again. The Ftse 100 is being a laggard, as seems to be the trend of 2020. And it had broken down below the 6,000 level on more than one occasion, creeps back above, but then falls back below it again. But what is interesting is the pound versus the dollar is showing quite a lot of strength. So it's up around $1.32 as I make this video, which is perhaps surprising given the backdrop and our handling of the coronavirus, the Brexit uncertainty. But it's largely down to the fact that the dollar keeps falling. And as I've mentioned in previous videos, the strength of the dollar seems to be driving almost everything. So keep an eye on the US dollar index, which is still around that sort of 93 level. If we see a rebound, some strengthening of the dollar index, then that could mean that we're going to get some more wobbles in markets. And this week I completed a piece of research for 80/20 investor members, which looked at the impact of the US election on investment markets. So make sure you check that out if you're a member. If not, then don't forget you can take a free trial. Now, in that piece of research, I actually talk about why the price of the S&P 500 during the month of August is important and how it could actually predict the outcome of the US election. But I also talk about the impact of the election on investment markets generally, sort of before, during and after. But the key point I want to mention here is that the dollar tends to strengthen during the US election and after the US election. And if that's the case, given that it's been a key driver of trends in markets at the moment, then it probably suggests we're going to see a bout of volatility in the next couple of months, which could cause markets to wobble. And some of the momentum trades we've seen of late have a wobble and potentially reverse. So as the summer comes to an end, it will be interesting to see how the underlying trends within markets unfold. Now, at the end of this week, central bankers will be having a meeting virtually in Jackson Hole where they will discuss a whole variety of topics. But the key thing within that particular meeting is what Jerome Powell, who is the chair of the US Federal Reserve, will say. And there will be people looking at his speech for an indication that perhaps the Central Bank of America will, in fact, loosen monetary policy further in the sort of months ahead, which would obviously be good for the stock market. So that will be the biggest thing in the next few days and possibly weeks that could move markets. So keep an eye on news headlines over the weekend. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me via email, damien@moneytothemasses.com. On Twitter, Money to the Masses with the number 2. We're on Instagram, Facebook, and of course, subscribe to our YouTube channel.